here. We're going to go to New York, though, as we welcome in Diane King Hall, the host of Morning Movers, with some stock movers here for us. Diane, good morning to you. Let's talk Meta. I mean, this stock has been a roller coaster in its own right. What do we have, like 25 straight up days to start the year? That was, that seems like a ancient history at this point.
Yeah, look, I mean, but Meta has been the outperformer in the group of the Mag 7, right? And it's had consistent overall outperformance, especially when you think about the turbulence that we saw just a few months ago. It's been on the upswing since then. Now, you've got some analyst activity around it today. Needham is upgrading. They're converting from a bear to, we wouldn't call them a bull. They're upgrading it to a hold. They haven't issued a price target, so they really are still on the sidelines. The upgrade is they're expecting some better quarterly results coming up and expecting improved 2025 guidance. Again, they held off on upgrading to a full out buy rating. They're still essentially wary. Again, they see the performance looks better than expected. They're good at getting things done with just fewer people. It's a lean global software business, even though obviously we know they've been leaning into hiring on the AI front. We'll talk about that in a little bit in a moment. Alex, some of the costs are a concern for Needham. That may be why they're even, challenged on putting a price target here. Meta is efficient. I think about the year of efficiency. That is something they leaned into a couple years ago. The cost concern for Needham, employee costs, they say, is still too high. They're higher than rivals like Alphabet, Google, and Microsoft, especially when you think about stock compensation here, right? And look at where the stock is. They think that analysts are underestimating and investors are underestimating exactly how expensive those costs are for Meta's workforce. They're spending big on AI. A lot of the way many in the sell side view this is that it's worth it, right? They're spending a lot of money to compete in artificial intelligence. Their capital spending is set to jump this year. Needham sees that jumping as much as more than 80%. But again, is it worth it is the question. They think that the spending might not pay off, and could some of it be wasted, Alex?
And this is Laura Martin over at Needham that covers Meta. It's the only name that before this that she was bearish on. So a little bit of capitulation maybe as well from Needham and Laura. But all things considered, it's been a roller coaster ride. You can see why she was bearish. It just took her a little bit to jump on board to the upside here. But what I'm seeing, Diane, is nearly 90% of them, of the analysts on the street, are in the buy camp, just under 10% in hold. And there's only two sell ratings even after this. So she was very much in the minority, and still is, not even just being outright bullish. Meta, as you've talked about, its outperformance amongst the Mag 7 cohort as a group. Kind of final thoughts here on Meta as we open up this, holiday shortened week, final trading day?
Look, I mean, she makes those points, but again, to your point, most of the analyst community views Meta, they have bullish take on Meta, as you pointed out there. And she did point that out as well. She questioned that. She thinks that it's a crowded trade. She points out that, again, 90% of analysts have a buy rating on Meta. So that implies, from her point of view, that the stock might be overowned and then vulnerable to pullbacks. That is a good point, that it could be vulnerable to pullbacks. But again, the momentum has been on the side of Meta, because when you think about the outperformance in the Mag 7, it's been Meta, Microsoft, and NVIDIA, and Meta has largely been leading the pack. One of the things that we've been talking about recently is that spending that they've made on their AI hiring. There's a Bloomberg report this week that they have a new group called the Meta Superintelligence Labs, MSL, that will be led by Alexander Wang, who was the CEO of Scale AI, which we knew that essentially that was an acquisition for Meta, but an acquisition essentially to bring on that talent because of how much they're investing in AI, Alex.
Let's talk FedEx. Hugo Watkins over at BNP Paribas did what Laura didn't have the courage to do, the double upgrade, flipping the cards over here.
Yeah, that's right. I mean, exactly. This is the next level of bullish sentiment for FedEx from BNP Paribas. Again, that double upgrade to outperform from underperform. it signals essentially a major shift in sentiment for them over FedEx. They're pointing to oversold conditions, and then overall just relative outperformance, say, compared to competitors when it comes to volume and yield growth for FedEx. They see them just having operational strength as well versus UPS on key metrics, even though, of course, we know this space is a competitive space. They do expect that outperformance to continue. They think that there are some company-specific headwinds when it comes to UPS that puts pressure on them and weighs on that performance. So they see, again, FedEx the standout in the competitive landscape. It is still a concern, competition, and that has more to do with Amazon. They do obviously point out that Amazon is a strong player in the domestic shipping segment, but they point out that FedEx has still managed to hold up even in the face of that competition from Amazon. And look, you are seeing shares move higher. In the pre-market, the shares were only indicated up a little bit more than 1%, and now a stronger gainer at the moment, up 2.25%, Alex.
Diane, I love the Amazon point. Obviously, it's the big story, whether it's UPS, FedEx, or any other shipper. What I'm realizing, and we've seen this throughout our lives in different areas, whether it's what Uber did to the taxi industry, whether it's what Adobe is going through in real time with what AI technology is doing, the Blockbusters, the Sears, the department stores in general, and how things can be disrupted regardless of how strong your moat was and how strong your market share was. I'm not sure. I thought FedEx and UPS would be disrupted as greatly as they have been and are right now. And I think the lesson should be, whether that's for business owners, investors, us as a market commentators, is assume nothing is safe, because FedEx and UPS, I mean, they're going through it right now. I mean, they became so reliant on Amazon, and then Amazon just decided to cut them out.
I know. No, you make a great point. It's so funny. I was having a conversation with my mom this week about just how times have changed and something she used to do, and I was just explaining to her about how apps are the equivalent of, the old school catalog, for instance, where you could order from a catalog and have it delivered, and now you have the Instacart, et cetera. And now for FedEx and UPS, obviously they're dealing with Amazon just doing things themselves. But again, to this analyst point, and there are more analysts than not who are constructive or bullish on FedEx. It's got nearly 24 buy ratings here. You've got some hold ratings, but the view of the sell side leans bullish. And some of that may be, again, the point of BNP Paribas, just the oversold conditions. It's been an underperformer compared to the S&P 500 year to date, and maybe it's time for that turnaround in general. So there is some growing positive analyst sentiment around FedEx, but you can't ignore the disruption of Amazon, and they have to figure out how to, retain market share. The other thing that Amazon has in its favor, though there's been pushes against that, is it does not have a unionized workforce. That's been one of the challenges, for instance, with regard to UPS.
Well, and one thing, too, and I think this last thing that we're going to talk about, which is Roku, shows, is that just because you're disrupted doesn't mean you're going to go the way of Blockbuster or the way of Sears. If you can adapt and change and kind of go with the flow, or even be forward thinking, you can continue to look at Netflix. Netflix started as a mail-order DVD service, and it pioneered a whole industry. Roku brought us from the DVD and the VCR to the modern era. And if they would have stuck with just those smart TV adapters for the non-smart TVs, they probably wouldn't be a publicly traded company that trades at $87 a share. But they became sort of a software digital ads company along the way too, Diane, and that's why we still talk about them.
Yeah, and of course, to your point, the partnership with Amazon is actually very strong and creating more conviction around Roku when it comes to analyst views. So today you've got Bank of America lifting its price target on Roku to 110. That's up from their previous target of 100. They're reiterating their buy rating. You recall, Alex, they had reinstituted coverage back in March with the buy rating then, and they've been gradually increasing that for Roku. And it's got some of the wind at its back. So that news about that partnership with Amazon, and that has to do with the ad platform, the DSP platform, has been good news for Roku, and you've seen increasingly more analysts become more bullish on Roku as a result from that. For Bank of America, this also has to do with the macro picture improving. Bank of America saying macro certainty is uncertainty rather is easing, and then that advertising sentiment has improved throughout the quarter, and that they see there's potential upside to Roku and their full year outlook as a result of that. It reminds me of Loop Capital a couple weeks ago or so, when coming off of the Cannes Lion event, where you hear a lot about advertising developments, and that's where that Roku news came out. Loop Capital at the time had become more bullish on Roku as a result. That they had called it a game-changing ad partnership with Amazon. They had raised their price target to $100 a share. Then they had it at 80. We've seen it gain some ground since then. Again, they see those stronger financials in 2025 because of that partnership, Alex.
Yeah, that was Alan Gould from Loop Capital who made that call, and it was a prudent one for sure. Interesting name, definitely one that has a little bit more disagreement on the street, a little bit more mixed sentiment, holds, sells, buys, all of the above when it comes to this. But Diane, a record-setting day here, even though it's holiday shortened. So thanks as always for joining us, and have a great holiday weekend if I don't talk to you again.